Bismillah ar-Rahman ar-Rahim. Respected Commissioner SCP, Abdurrahman Waraich, who is also my very dear friend, Chief Executive Pakistan Stock Exchange, Farooq Khan, board members of Pakistan Stock Exchange, ladies and gentlemen, Assalamu alaikum. So I have 5 slides here, and I appreciate the fact that we are already running little late than the schedule. So I'll try to cover them as quickly as possible, and I'll try to stop on those slides where there's some recommendations, which probably if Abdurrahman Waraich Sahib is also listening to me, he will take note of. So this is slight overview of the debt market in Pakistan. So there's bank channel, non-bank channel. On the banking side, which is primarily the larger side, we have conventional and Islamic mode of financing. Either the corporates which are into manufacturing service business raise funding under a bilateral financing arrangement, or sometimes they go for syndicated financing arrangement. And the investor base on this side of the debt markets are primarily banks and DFIs. But definitely there is another market, not much developed, but huge potential. So that's, I would say, non-banking market. It's the conventional modes are term finance certificates, bonds, and commercial paper. Islamic mode of finance, which are very promising, growing very fast. It's Sukuk and Islamic commercial paper. And the investor base for raising debt capital from this piece of the market includes definitely banks and DFIs, and then NBFIs, including AMCs, insurance companies, corporates, retirement benefit funds of corporates, and general public where the instruments are listed. So this is a very high level overview. But if we look at how the funding are being channelized in the debt market on an overall basis, who are the beneficiaries, who are the investors. So the local debt market is largely dominated by Government of Pakistan. So total debt securities issued by Government of Pakistan, which includes T-bills, PIBs, and Sukuk, worth 29 trillion as of today. Out of that, Sukuk is relatively a smaller portion, growing at a faster pace, which is 3 trillion rupees. And the investor base of these instruments are again primarily banks in Pakistan. So 21 trillion of this stock is held by financial institutions, which are commercial banks, scheduled commercial banks, and development financial institutions. AMCs and insurance companies holds jointly 3.6 trillion, and the remaining 4.9 trillion is held by corporates and primarily their retirement funds. Although the debt capital market where Government of Pakistan has used as a source of funding is quite large, but if we look at the corporate debt market, total corporate debt market, when I say, means all type of debt, your bilateral debt, your syndicated debt, your sukuks, your TFCs, it is only 11 trillion. And out of that, the corporate debt market, which is the corporate capital market, where the corporate debt market has used capital instruments like sukuks and TFCs, it's only 0.8 trillion. So it's very, very small. So on one side is small, definitely, but on another side, one can see there's a potential to grow, but we need to work on to explore that potential. So as of today, there are approximately 117 private issues which are in the form of TFC, sukuks, both listed and non-listed, which are there in the capital market. There are initiatives which are being underway. Few of them I like to share here. Very recently, there is an instrument which has been issued with Abdurrahman Waraich, and in the morning, the Honorable Finance Minister also mentioned about, was raising Sukuk capital through issuance of GOP Ijara Sukuk through the PSX platform. That was very, very successful. The issue was oversubscribed by 13 to 15 times. 400 billion rupees of bids were received, although the target auction size was only 30 billion rupees. I think there's a phenomenal benefit which The government of Pakistan was able to take out of that because due to price discovery on the stock exchange and the larger investor base who was able to tap into this instrument, the price was significantly lower than what the earlier issues cut-off yield was. So I think that was a very successful issue. I would say hats off to the MD PSX. I personally know that Abdur Rahman Baraich, Commissioner SCP, worked very, very hard on making this successful. Meezan Bank was also lucky enough to be part of this deal because we were working with the ministry on structuring this transaction as one of the financial advisors to the government of Pakistan. Another very interesting issue which happened a couple of years ago was the Pakistan Energy Sukuk. So at that point in time, there was a company called Pakistan Holding Private Limited, which was struggling to raise debt capital from banks. And then I would say I was one of the team member in raising that idea. At that point in time, I was serving as CEO of Bank Islami to issue a Pakistan Energy Sukuk, which was later with the intervention of Abdur Rahman Baraich, who was DG Debt then, and now he's Commissioner SECP. He said, Amir, let's issue this from the platform of PSX. And that was again a very successful issue. Although in the first issue, which was privately placed, the pricing was little higher, but in the next issue, we used the reverse Dutch auction method and we were able to significantly reduce the prices. So the purpose of sharing these two examples here with the potential investor is that the power of transparency and liquidity and visibility on Pakistan Stock Exchange make it possible even for government of Pakistan, who to date is the largest borrower in Pakistan, to reduce the pricing of their borrowings by tapping into the Pakistan Stock Exchange. So this is one potential opportunity. You need to little harder for the first time to develop it, but once that platform is developed for your entity, then it's always available to you. You can go to that platform again and again to raise debt capital. But one thing which is definitely very important, once you issue an instrument, to be able to successfully go back to the stock exchange platform is to ensure that your instrument has liquidity so that the potential investors, specifically the smaller one who have invested into it, are able to take an exit at a right price. And for that, definitely the role of market making is necessary. But end of the day, the purpose of market maker is to provide liquidity in a situation where there are enough buyers and sellers are also available. So it is important for an efficient market where there is a fair price discovery, that there is a knowledgeable willing buyer and there is a knowledgeable willing seller into the market, willing to trade their securities, and then definitely a market maker can generate liquidity for temporary periods of time. So market making is necessary, but definitely availability of a large number of buyers and sellers into the market is also very important, but which unfortunately at this point in time is not present in the market. So definitely there are market makers that they quote two-way prices, they keep the instrument in their inventory, but the liquidity is still absent because of the absence of the investor base into the market. So this is one area where the issuer has to come to this market and the investors will be guided and promoted to invest into the instruments directly. So like to share a few recommendations for developing this market, both from the investor's angle and from the issuer angle, because both demand and supply is extremely important for the proper functioning of the market. So here there are a few suggestions I will first touch upon for the issuer base, because there are more issuers sitting in this room than the investor. Definitely awareness programs, because generally it is presented in a way that if you go to an stock exchange, you have to go through a whole list of regulations and hurdles and difficulties and bureaucracies. Frankly, I have personally raised instruments on stock exchange, and my personal experience with PSX is outstanding. I think they have been very, very efficient in approving the debt capital instrument. It was weeks, frankly, 1 or 2 weeks were able to get through our approvals from the Pakistan Stock Exchange. But there was one hurdle which I experienced multiple times, securing an approval from after the stock exchange from SECP. I think this is, frankly, I would say, because stock exchange is an independent platform, and the investors who are coming to the stock exchange and buying securities, they are coming to a platform. So a platform approval is enough. There is no need for a regulatory approval for a corporate entity to issue its instrument on the stock exchange. So there is a need to, frankly, eliminate the requirement of any SECP approval at all for a debt capital market instrument. Once rating is there, PSX approval is there, there is frankly no need for SECP approval, although there are promises that it will be done in 2 weeks to 29 days, but my experience was 6 months last time. And I've been personally twice to stock exchange and eventually was able to secure the approvals only because of my relationship and friendship. So I think regulatory approvals for a private capital market instrument, I don't see any reason for that. So this is one suggestion. I think underwriting requirements. When a capital market instrument is being issued, a portion of it is privately placed or placed to a pre-IPO investor, but then there is a requirement for underwriting. I think if the instrument is not successful, and that won't be an issue, you will not be able to raise it. But if the instrument is huge traction, then asking the issuer to get underwriting done for the issue is also slightly unnecessary. We can get rid of that requirement as well. When personally I have experienced, because there is a requirement for licensing for an underwriter also, so the investors who are banks who wanted to invest, who have given firm commitment to invest into the instrument, were unable to underwrite their commitment. So there is an instrument which is oversubscribed, but because of a regulatory hassle, we have to run around to brokerage houses because banks are not willing to renew their underwriting licenses, because a couple of years ago, SECP introduced 3-4 additional licenses for scheduled commercial bank. That scheduled commercial bank has to get a license for market making, scheduled commercial bank has to get a separate license for banker to the issue, for consultant to the issue, and for underwriting. So it's very difficult to maintain all those licenses because every year you have to go to the board, get an approval for these licenses and then pay the fees. I think these licensing requirement, fees is good enough. Banks are probably willing to pay the fees, but getting all the cycles and regulatory cycles done and again and again, there is no need for that. So we should work on eliminating that so that the same investors who are willing to put in money, if they are qualified financial institutions, they could underwrite it. Tax incentives, definitely at one point in time there was clause 18B of second schedule where rebate was being offered for Sharia compliant companies. I think there is enough not enough benefit of that was used at that point in time because it was little complicated. But I would recommend that going forward, if the regulators and the stock exchange could consider about giving a rebate on the profit being paid by an issuer on a listed sukuk instrument. So that on one side will promote issuance of a listed debt securities, but also simultaneously promote Islamization of our economy, which is very important for Pakistan. So a rebate, maybe even 5% rebate will be good enough. Say, for example, if today the pricing is 20%, a 5% rebate will translate into 1% reduction in the overall cost for that issuer, and that will make a lot of sense to them. So if we look at the investor base, definitely there's a need for investor awareness program, which probably PSX and banks and brokerage houses has to step up to create that awareness. I think not much has been done on that side. There are, interestingly, tax incentives available for investors to invest into sukuk, into listed sukuks, and for individual investors and AOPs, the tax rate is much lesser because otherwise, when under under Section 7 of the Income Tax Ordinance, when the income of debt securities increases by 5 million rupees, it's taxed at a normal rate of tax. But for sukuk specifically, there is Section 5AA available, and you will be taxed at a much lower rate of 12.5%. So if your earning is below 1 million from that instrument, it's 10%, otherwise it's 12.5%. I think the same rate should be applied for corporates. Because in the morning I was listening to Mia Mansha Saab and he was discussing the disparity of corporatization. So if I am an association of person, if I'm a partnership firm, I have to pay 12.5% tax on my income. If I'm a company, I have to pay 25%. So that's a little unreasonable. I think it needs to be aligned, and probably regulators have to work on it. TSX can recommend in their next cycle of for recommendation for the finance bill. I think there is a need for retirement funds available to different individuals. Like every individual is a beneficiary for its investment in provident fund. So there is a 401k in US, we all know. The similar provision has to be introduced in Pakistan so that the beneficiaries of the provident fund can decide where they want to invest their money. So if the beneficiary have the ability and they have advisors available, just like in 401k they are available, so they will be able to channelize their fund to debt capital markets, and PSX will be beneficiary. The issuer base, which are the corporate entities, they will be the beneficiary. So this is, I think this is very important. And simultaneously, one important issue, I think, which is actually putting a huge drag on us. So I just asked my friend to reconfirm, Khurram, that how many UINs do we have? So he said 240,000. So in a population of 240 million people, where roughly 90 million people are bankable population, we have only 240,000 UINs. And out of that, he said 40,000 are active. So we actually 40,000 active investors. So I think we can leverage on digital account opening, because the issue is if you want to open a CDC account, there are only two ways. You either go to a CDC house, which has only probably 2 offices in Karachi. For a population of 20 million, they have 2 offices. And then, or you go to a brokerage house, which also have a very limited office. Either we take this account opening process to bank branches, or even an easier option is to get those accounts open in a digital manner. If Easy Paisa can open their accounts, so I think, yeah, that's great. Farooq is saying they are working on it. Okay, that's great. That's great. So I was not aware of that it's being rolled out, but now you need to promote it. So I think if I am unaware, then a lot of people like me are also unaware. So there is a lot of promotion which need to be done. And then electronic trading platforms have to be made very easy. Because if you go to the internet, although a lot of these sites are banned in Pakistan, you can trade anywhere in the world on. There are so many digital stock exchanges which are there, which are working, and you can go and invest. So I think the electronic trading platform, Farooq Saab, if the account can be opened digitally, there should be a solution where a person can go and invest without a need for a broker being directly involved to trade. So funds, there is a common switch, banking switch, which is one link. All the banks are linked. The person can transfer money into his or her digital account in CDC, and then from there they should be able to trade. So I think a lot more development has to be done probably to enable an investor to open an account digitally, transfer fund digitally, and then trade. Interestingly, these small or large websites like Binance and all that, they have that functionality available in their application. So we need to have that functionality legally and formally available in our stock exchanges. And last one, which I felt is it's interesting for banks when they are issuing their additional tier 1 capital. When we go to mutual funds, the mutual fund says they cannot buy an additional tier 1 instrument. Neither they can buy in an equity fund, nor they can buy in a debt fund, nor in a balance fund. I think there is a need. So if my friend Abdur Rahman Baraich is listening to me, there's a need to give some clarity to asset management companies how to invest in additional tier 1 sukuk or additional tier 1 TFCs issued by banks. So this is it from my side. We are ending with few recommendations, but with a belief that the market can be developed. The technology has enabled us to move very fast on all these initiatives and make it a vibrant market. Thank you so much.